Yeah, you're welcome to my YouTube channel. Peradventure, this is the first time you would be watching a video on this channel. I drop content like this, tutorials to help forex traders learn, those basics that makes you a professional trader. And today I will be teaching briefly on Fibonacci retracement tool. Fibonacci retracement tool. But before I go on, if you've not subscribed to my YouTube channel, why not just do me a favor? Look at the subscribe button below the video. Kindly click on the subscribe button so you can always get updated for more content like this. And also can do well to like the video, drop a comment, ask questions. I would be glad to receive your questions and answer your questions. All right, so today I'll be explaining quickly the Fibonacci retracement tool. Fibonacci retracement tool is one of so many, tools we use in forex trading. And today I'll be using a chart of V volatility 75 chart. Volatility 75. I could actually have used the normal currency pair charts, but I decided to use this because the currency pair market is closed, being weekend. Of course, no forex runs Monday to Friday. Now, this is volatility 75 index. I'm sure many forex traders knows about this pair. All right, now, so before you want to learn about this, I want to believe that you already have an idea. You're probably knowledgeable about support and resistance lines, because the Fibonacci retracement just helps us to know, to identify basic support levels or resistance levels on our charts. And using this now, this is a daily time frame you can see here. Um, when you open your chart, the first thing you'd find out is try to locate the swing high and the swing low on that time frame. Now on this daily time frame, now this is the swing high over here. You can see it. That's the swing high over there. And then, okay, yeah, that's the swing guy over there. And the swing guy simply is the highest, point. If I were teaching supply and demand zone now, I probably should put a rectangle here, making this place a supply zone. But let's ignore that for now. So this is our swing high, and the swing low is the lowest point. This is also known as the demand zone. Fine, there could actually be more than one demand zones, but this is the swing high, the highest, the peak, for that time frame. Mind you, if I go to another time frame, I will find another swing high for that time frame. So for this time frame now, this place that I'm trying to mark here is the swing high, and this is the swing low. Now looking at the chart, price had gone from bottom to top, and after getting to the swing high, it started pulling back, and then it has been ranging here for weeks now. You can see it got to somewhere here. This spot, this center spot where price is presently, can you see just that spot? It has been ranging on that spot for a while. Let me zoom out back. It has been ranging on a daily time frame. So the first thing you do is, since the retracement, we can actually call this a retracement. Probably after the ranging, price can continue bullish. So this looks like a bearish retracement that has lasted for weeks. So since you know that the initial trend was an uptrend from down here to up here, before it finally started falling to this point and it started ranging, we're going to pick our retracement tool. Now tap here. You have so many tools here. um okay, we could use this. This is it here. You can see this F. Let me go back again. My phone is on landscape mode. You can see this shape. If I put it on portrait mode and I tap my screen, I can you still see it here? So it brings me back to that same option. From this option you can pick a few others, but for now we need the Fibonacci, and that's where to pick the Fibonacci. I click on it and it's already on my hand, but I only need to tap the screen to drop it there. So I put it here and consider it here. Now I long press it for 2 seconds and I drag. Can you see? I drag and it's showing. Now how does this work? You see this lowest point of it, I drag it upwards, right? Ensure that it connects the swing low to the swing high. Can you see that? Now be careful not to turn it upside down. I could do something like, let me show you this. I could make a mistake and just place it. You don't place it just anyhow you like. You have to ensure. Look at this. Can you see? Now I've turned it upside down, and then the numbering is different. I've turned it upside down. So how do you know where to put the top and this and the bottom? The bottom is where you see the 100, the 100%. That's the 100%. I put the 100% at the bottom here now because it was a bullish, it was initially a bullish trend. Price was going up. So this is where the retracement started. Price went bullish for days until it got to this swing high, and this retracement started, and that's why the 0% is on that point where that's on the swing high, my swing high. So now look at it. It has numbers. We have the 23.6. Let me make use of these things that are here. Okay, I put my line on that 23.6. That is the first bus stop. The next line we have is the 38.2. You can see it here. You can see this. So I'm putting another line here, resistance line here. And after it, we have the next one, that's the 50%. So let me put this one here. That's another major resistance or support point. And lastly, we have the 61.8. The 61.8. Now, most times price is likely to retrace down below this, but you see, when it gets to the 50%, there's tendency that price continues its initial trend, and the initial trend was actually bullish too, yeah. So price kept on falling, but sometimes price might not return on the 50% retracement level. It might come to the last point, and that is the 61.8. 61.8. So let's put another line there. I click on my lines and I place it and set it just where I want it to be. So I've actually identified major support and resistance points on my daily time frame on this chart. Like I said, many a times price gets to the 50% level, yeah, and reverses and continues its initial trend, or at times it can actually retrace till as much as 61.8%. And that's the next one here. This one, price can actually retrace to this point before going back up. But note this: if the price gets to 61.8 and does not reverse back to the initial trend, and for instance, in this case, let's say price continues selling, after it gets here, it didn't reverse, it now starts falling here. Know one thing for sure, that it's a total reversal in trend. It's no longer a retracement. Once it breaks, I'm talking about a clear break. Once it breaks this 61.8 clearly, it simply means that it's no longer a retracement. Price is now, it's now a change of trend, change of character, and then that means price is coming down. It's going to continue a bullish trend and probably go below even this 100%. So that is just the major way to label it. Like I said, I believe that most persons wanting to learn the Fibonacci should already be used to, familiar or conversant with the concept of support and resistance lines. So these things that are labeled here are just support lines and resistance lines. Now apparently price is inside here, it's a little above the 38. This is my price here, it's a little above 38.2, but still below 23.6. If it breaks this line, then most likely it's coming to the 50% again. Remember, it has been breaking up and down for weeks now. It has been ranging. So if it breaks this line again, it's probably heading for this line. But if it reverses at this point, then it's probably coming to this 23.6. So I think that explains. Like I said, this video is not majorly about explaining, it's not majorly about explaining support and resistance, because I expect that you probably have knowledge of it. Now you should understand that you won't just pick your trend and mark daily support and resistance like this and expect to trade on it. You probably need to come to a lower time frame. So now coming to an H4, let's see if we can identify something. Remember, we've already labeled them. This is our 38.2 line. This, oh, I've shifted it. Let me adjust it back. All right. I need to long press for you to key. Alright, so back to H4. Now this is our 38.2 line. This is our 50% line. You can see price is presently ranging over this support line. It's presently ranging over this support line, and no one can tell what the market does next. So let me just show you something. Now on an H4, this is a trend on its own. On H4, this is a bullish trend till this place before price started dropping. Let me come to H1. Maybe if I will see better on H1. You can see there was a double bottom here, and then price went bullish. Now this is also a bullish trend, so we can actually pick another, another retracement there, because once price got to this peak, this swing high. Let me remove this. Once price got to the peak here, this swing high, it started retracing downwards. That's a bearish retracement. So you can decide to trade on the hourly time frame as well. So I've put my retracement here. Oh, I think I've shifted something. Let me adjust it back on the daily time frame. It's quite touchy, so you just have to be careful not to tamper with them. Yeah, that's the 61.8 support line. And of course, we know that once a support line gets broken, it becomes a resistance. Let's go back to H1. Now I think I explained earlier why the 0% starts from up and the 100% starts from down. Let me make it clear. Where the retracement started from is where that is where your 0% will be, and this is where the retracement started from. Make sure you let it connect with the swing high, and your 100% connects to the swing low for accurate measurements. Now on this lower time frame, now you can see that we have something else here. On the lower time frame, this is 23.6. That's 23.6, and that is exactly where the price is. So we can actually put another line here. This is 23.6 here. I believe we can see. Let me zoom out. This is 23.6 here. So we put it there. Now of course price is still ranging. This is actually a zone. It was it was broken here. It was meant to come for a test, but price has been ranging over this place since yesterday. So currently price is just ranging around this 23.6. Remember, until you see a clear breakout either to the up or the downside, don't make a decision. In this case, if price breaks to the downside, remember there is also another support line here, or support line here. If it breaks this one as well, then the next thing we should be expecting is that price is headed towards this 38.2 as well. Now it could actually be a little tricky. I mean, using Fibonacci on different time frames. Sometimes I could have Fibonacci on up to 3 time frames, and they show me different things. Once you understand it, it takes practice though, but once you understand it, you no longer get confused again. You understand every bit of it, every bit of it. So for me, I understand that I have two different lines on this one. So I hope I've been able to communicate. The main thing is understanding how to place the Fibonacci tool and how it is being used. And I believe that you've probably learned something. If you have questions, you can always drop your questions, in the comments section. Thank you once again. Don't forget to subscribe to my YouTube channel.